This is Christopher Lewis from FXCOINZ taking a look at oil and natural gas. Currently, the backdrop for energy is one that we've been talking about for a while with the war in the Middle East and the now stalemate and ever changing attitude of the Americans and the Iranians as to what to do next. And the games being played through the media and online have more or less locked these markets up. The one thing that I would say, though, is the supply chain is going to continue to suffer. And of course, interest rates are going to continue to climb as long as the supply chain does suffer. And therefore, we have a knock on effect around the world. Looking at the light sweet crude oil market, it appears that we did gap a little bit lower on Tuesday to start the session, but then bounced enough to just kind of hang out. And I think the $100 level is an area that a lot of people will be watching, as it is a large, round, psychologically significant figure. And it's an area, of course, that people will be watching overall. I do think that traders will continue to look at this as a buy on the dip situation. The $110 level above is a bit of a target, I think, but I'm not looking for much here. I just think that when it sells off, you're looking for a little bit of a bounce you can get involved in. Natural gas this time of year is a market that I never buy. I'm looking to sell it as soon as we show signs of exhaustion. We got a little bit of that on Monday, but we'll just have to wait and see. The natural gas markets, of course, have to deal with a very severe lack of demand from the United States, with the exception this week we're going to have some hot weather, but I think we also have to look at this as a market that I think, given enough time, probably has to come to terms with the fact that supply far over outweighs demand. At least this time of year, I prefer to short. I think we probably could go back down to the $2.60 level given enough time. I'm just waiting to see a bit of a dip below the $3 level.